Hey guys, and welcome back to another I Know First weekly market review. At I Know First, we've created an artificial intelligence predictive algorithm that forecasts the stock market on a daily basis. Our goal is to find the best investment opportunities and beat the stock market. Today, we're going to talk about our AI's prediction of the market downturn and talk to you guys about a very popular strategy that is very relevant right now. Let's start off with an example forecast from this past week. This week was a pretty bad week for the market. However, our AI algorithm was able to adapt and change to the ever-changing market and find the best investment opportunities. Our AI predicted LYG to be a top stock and it went up 10% while the market was down. Not only does our algorithm forecast the best stocks to buy, but it also tells you the best stocks to short. Here, on February 21st, our AI picked the best 10 stocks to short. 8 out of 10 of the stocks were right, including Carvana. In 3 days, Carvana went down over 10%. The average return for this forecast was 3.74%, while the S&P 500 was negative 2.65% in this time frame. On February 21st, our AI had a poor forecast for the US market. It had the VIX and the VXN at the very top of the forecast, which is a big sign of a lot of volatility. It also has the S&P 500 and the Nasdaq negative in the short term. This forecast was correct. Our AI has been having low and even negative signals for the US market for a while now. Back on February 2nd, our AI showed that many other countries' indexes were having way better forecasts than the US market. We see Argentina, Europe, Tel Aviv, Germany, China, and so much more above the S&P 500. Not just that, but we also see the VXN forecast super high, as well as the Nasdaq forecast being negative. On the right side, you can see the forecast from February 21st, where we see the same thing. These forecasts were spot on. You can see the Nasdaq was down more than 3%. The S&P 500 was negative, however the forecast had it being very low, which is consistent. Now, if you guys thought this early AI prediction of the stock market going down was cool, wait until you see the next forecast. Our negative forecasts of the US market goes all the way back until January 1st. On New Year's, we started to see the foreign markets having higher signals like we explained before. This AI prediction was a 3-month forecast, and we are 2 months into it. On the right, you can see the results so far of these AI predictions. All of the foreign markets here are positive, including the GDAX, which is Germany, which went up 13% in 2 months. We also have the VIX going up 14% and the S&P 500, which was the lowest out of the indexes, go up the lowest amount. If we take a look at the technical analysis for the Nasdaq, we can see that for over a year now, it's following a trend. Every time it hits that red line, it bounces back up. This is the third time it is hitting this support line, and if it breaks, it will not be good. But as of now, we are sitting on support, which is some positive news for the Nasdaq. I Know First has created their own Sector 1 strategy. Similar to the Shiller sector strategy, I Know First uses their AI algorithm to forecast the 3 sectors in the market and then buys the SPY to finish the monthly portfolio. The way this strategy works is it takes the 11 GICS level 1 sectors, and that quantitative data goes into our artificial neural networks, and then based on the forecast our algorithm gives us, we focus and take the most predictable sectors. From those sectors that have the highest predictability, we take the 3 sectors with the highest signal. Each sector can get a maximum of 25% of the portfolio, and the percentage that's left over goes into either the SPY or S&P 100. Here is the performance of the strategy since 2020 compared to the S&P 500. You can see we outperformed by 57.7%. Now, a similar strategy that is very popular is the Shiller strategy, which also focuses only on the GICS level 1 sectors. The difference between the two strategies is we use only AI to pick the best sectors, and we only pick 3 GICS level 1 sectors, while Shiller picks 4. You can see that both our strategy and the Shiller strategy are beating the S&P 500, but ours outperforms. This strategy is super relevant right now, because when the market starts to fall, you want to know which sectors you should be in. Now, if the algorithm sees very negative results for most of the sectors, then we default into only buying just the SPY. This way, we are limiting our risk in the market, and when the AI sees the switch back to the green side, then we go back to buying the best sectors. As we mentioned earlier, January 1st, we had not so positive forecasts for the market, and since January 1st, we've only been in the SPY. Ultimately, this is only one of many strategies that I Know First has to offer. Thanks for watching. If you enjoyed this video, don't forget to like and subscribe. Drop your take in the comments below. Here's to smarter, AI-driven investing. See you in the next one.